winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle. So let's move on to...
E-break. Cheers.
Cheers. Cheers.
Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Pint Podcast. As always, I'm your host, Tom Reed, and I'm glad to be joined by my colleagues, Steve Earle, CEO of Bald Insurance.
Hello.
Adam Mitchell, CEO of Mitch Insurance.
Hello.
And Jeff Roy, CEO of Excalibur Insurance.
Welcome, Pinters, to another season.
Gentlemen, we're now in season 9. Who could have thunk it? It's been a little while, so got to give a quick shout out to our sponsor, who we haven't talked about in too long. So thank you, IFS Premium Finance, for supporting the show here. So today we're going to get into an episode where we're comparing insurance innovation in Canada versus the rest of the world. I'm going to ask each of the guys their feedback on a certain set of topics, and then we'll discuss whether it is a problem that, spoiler alert, Canada is actually behind the rest of the world in innovation across most different channels of innovation. So let's just jump right into it here. So I'm going to start off in no particular order. I'm going to start talking about the use of Gen AI and machine learning in underwriting and claims. Right. So a lot of Canadian insurers have been using machine learning for quite some time, using AI to analyze huge data sets, identifying patterns and trends, predominantly for pricing and risk selection. Some insurers are even using satellite imaging, using AI to analyze that for things like wildfire and floods. So there is a fair amount there. Compared to the US, though, the US is a leader in AI adoption. There's insurers are using AI for chatbots, customer service chatbots, sophisticated fraud detection, as well as some of the sort of older things that the Canadian insurers are using. So Canada's up there, but the US is far beyond us. How do you guys react to that? Is that your experience? And if so, do you think that matters?
Sure. I like what's going on with respect to underwriting for wildfire, flood, and so on. I don't know where to go with it when you look at like fraud detection. Good, but are we going to get how accurate is this? And are we going to get it if you're using it quote unquote for underwriting and you're using AI? Are we concerned at all about whether it's hallucinations or just incorrect data?
I don't really know where the rubber's hitting the road yet, to be honest. I think everyone's still struggling to put it into. I mean, there's also the fine line between what's pattern recognition and just pure old school analytics versus actual AI end pieces. You're seeing some start to, claim to bring it out in underwriting, but I'm not sure if AI is producing new insights or just well-structured data is pulling out the pattern recognition and pricing.
Well, they're still not getting it any better now that they're using it. Is it improving? Right?
I mean, so you've seen a couple be able to cherry pick some risks. So the two that come to mind are new entrants, one in property and one in auto, and both growing like a weed. And they had the new movers advantage of not cannibalizing their back book. And by building it and cherry picking a couple little pieces, but was it AI that produced that insight, or was it simply looking across the section and where your competitors have chunky margins that you can cherry pick little pieces out of? I don't know that we'll know, was this an AI analytics discovery, or we're having this in our world of trying to untangle what's actually just a workflow engine and what is truly AI and coming down to decision trees and concepts every time versus if you wanted to follow the robust rules, i.e. look for places with chunky margin and just different ways to slice it. I'm not sure it's AI.
Jeff, what's your take? You've had more exposure to the US than the rest of us have.
You got to remember the U.S. is a little bit bigger than Canada, so there's so many more things happening because there's more people. You get 380, 400 million people. You're bound to have more things going on down there. In terms of Canada, you got Max Insurance, obviously, that's using predictive analytics and modeling things 100 million years into the future, using quantum computing to identify risks that will flood or catch fire.
Not using quantum computing.
What's that?
No one's using quantum computing, so there's no way that they are.
They say they are, so I don't know. I'm not going to argue with them, but they've got a ton of processing. They model at 100,000 years. Tom, you can probably chime in on that. You're aware of the Max model. That's what they
let's
built.
Let's start with the basis that quantum computers don't exist.
100,000 years into the future?
That accordingly, they can use computers to model risks that far into the future and price things better than some of the market. If you
turn around, I want to see if there's a puppet hand behind your shirt. Is there a hand back there?
There's no hand behind it. Yeah, I think you've got more you're seeing more AI probably in the US on claims than Canada, but now some of the insurance companies have the ability to look at total losses based on a photo to identify if it's a write-off or not, to save some time in the claims process. A few people dabbling in that. A few people dabbling with fraud detection by voice. A lot of carriers have been using phone analysis for years, whether to see if somebody's fraudulently saying something in claim situations. There's some stuff people dabbling around the outside. Is anybody completely crushing it with AI and the claims underwriting? I would say no at this point. There's a lot of opportunity. I think the agentic AI, where basically people have agentic agents that can actually do a lot of the work that are just like humans. I think that's where some of the ground will, some of the real benefits will come. But so there's a lot of opportunity there. And we're kind of on the precipice of people, carriers actually using agentic AI to do that. So
I'd love to see them do it. Like maybe we'll actually not have to be on hold so long talking to insurers, whether it's their billing department or underwriting department. I'd be happy to talk to a robot.
So Canada's doing, let's say, okay in this particular one. I know like Intact has been using machine learning for over a decade in pricing models, right? So, and their results are indicative of that. Is this so let's say Canada's slightly behind the rest of the world on this. Is this important, right? Are you okay with this? Do you see a need for dramatic increases in progress in this? Steve, you go first.
Yeah. Like, I mean, how can you not? How can you not? It's there. It's got to be used.
I'm going to qualify that as a mild yes. Jeff.
Everybody's trying to get better. As I said, they're using it more and more, but we haven't. I wouldn't say we had mass adoption yet at this point. There's a lot more we can go, and we are lagging behind the U.S., but we haven't had quite the same things the U.S. have had either. So
there's going to be some stupid shit that comes out of this too. Like when you look at when Guidewire was introduced, there were companies that just went, "Oh no, our pricing's fine because the computer told us so. It's really, really good." And then 18 months, 36 months into it, they're totally shit in the bed because the computer got it wrong. I foresee the same sort of things going to happen. It'll get some things right, but it's going to get some shit wrong too.
Absolutely guaranteed. The only question is how much authority did you give it to get something wrong in the first place? Adam, your take.
AI and machine learning for underwriting and claims. I don't think you can sleep on it or avoid it. Right. If your competitors get there first, you need to be investing in the arms race and figuring it out. But we don't actually know if it's going to become something. I mean, there's some theories saying that we're at the end of the computing power for any economic cost to actually run it. And it's going to be cost prohibitive to run large models really well. There's other ones coming out saying, no, you can train it in advanced logic and things. And MIT came out with that study, and maybe it's going to flip. We're going to have an inflection point. But if you're not, one of the things that's clear is if you don't have your data structured in good order and in your house in order, you won't be able to seize the opportunity when it comes either way. So probably keep improving all the legacy systems to be ready for it.
All right, so that's definitely yes. Canadian companies need to continue to invest in this, but because the downsides are bad and the upsides are staying alive. All right, let's flip over here to telematics and usage-based insurance. So we've had telematics UBI in Canada for some time, right? But we are way less mature than Europe and the US in telematics and UBI. Now, just before we started recording here, I asked the guys how much of their book is with, as sort of telematics based, and the answer was not a lot. So I'm going to pose a quick question, essentially a quick question to this one to you guys. We are behind. Is that because Canadian companies are not innovating, or Canadian policyholders aren't interested in this, or both? It seems like it's not getting a lot of traction in Canada. Do we really care? And Jeff, I'll let you go first.
Yeah, I think there's a certain segment of the population, go back to what UBI is, and there's a certain segment that does not want Big Brother looking at how they drive, and they will never want that done. So that kind of makes it difficult in terms of penetration. Intact, obviously Aviva first came out with Autograph, so they did it. They typically come out first, and then they backtracked on it, and then allowed Intact to come in. I think Intact's done very well with My Drive. CA's had was it My Pace, where you can kind of prepay in essence what you do. I don't know if it's been quite as attractive, but generally the one thing, no matter what, is people will buy it and go with it. But then when it comes down to implementing it, there's a definite drop off rate. So is UBI got much more room to grow in Canada? I don't know. I think it's kind of in a reasonably good spot. The people that want it can get it, but at the end of the day, the savings, for some people can be drastic, like 25%. But enough people just don't want Big Brother in their car. So I think it's not so much a tech problem. It's more it's more an invasion of their privacy thing.
I agree. We have a tough time. Unless it makes a drastic difference for, say, an occasional driver that had an accident or something, and an insurer says, well, we can, we'd like to have this person do UBI and we'll give them the discount, kind of thing. The delta's got to be big enough on those savings, and I don't think it's quite there yet to get over that mental hurdle for a lot of people. And it's still a pain in the ass. Like, you get in the car, oh shit, I'm with Adam and whatever, I got to turn it off so it doesn't think.
I'm wondering if the data is there. So I just pulled up this one study, PTO, Ptolemus. It's claiming there's 12 million UBI users as to 2022 as compared to 1.4 in Canadian. On a ratio basis, that's a bigger penetration of the Canadian population than it is the States. On an absolute number, it's a massive market and distribution in the States compared to Canada. But I have a hard time believing it's significantly more relevant there than here.
Here's a question. Do you think consumers would be more apt to use it if it was a universally accepted third party that was transportable? So you signed up with whoever, and now I can go and say this is how I drive. Plug into this, and I'll shop for insurance based on my driving habits, and it's not the insurer's UBI product. Do you think there'd be more uptake that way?
I think so, and along with that same centralized structure, you'd have some governance around the data and the insights. Because the one thing that bothers me, although theoretical, there doesn't seem to be any governance around how long the telematics holder can know the data about how you drove in your youth or at midnight or peace. For other tickets and things, they fall off your record at a certain point, and for accidents, they're only rateable past a certain point. This is interesting that they can have a forever log of your driving behaviors at any age.
Well, as long as you're using the app, but they still have the data.
Yeah, if there's a cloud place to store your data and it's portable, great. The only thing is people will say, well, everybody measures, they're measuring the same stuff, but are they measuring it the same way? Different apps, that kind of stuff will, Intact takes Aviva's information or CA's information and be able to use that, or Womanisa's, can they interplay? By the time that, the ability to consume that data somewhere and move it somewhere comes about, how relevant, how much work are you going to get for the benefit, right? I think that'd be a tricky point. I'm not sure if anybody's willing to do that.
Well, the part that is a big technical hurdle, and I don't mean to downplay it, but the part that bugs me about this whole thing is maybe I'm the only male on here that was a young dumb male at some point in time that drove aggressively and stupidly, and all the things that, like, I would not like to see my high school driving habits on a Google spreadsheet over average speed and time and this and that, and that would not be a good data set that would help my insurability today. So I like the idea of being able to be forgotten past a certain point. You repent and it goes away.
Well, I was going to say, I'm not so sure about my high school driving habits. I'd be concerned today. I just bought a stick shift Audi S4 with a big vroom vroom engine. I think if I ever went onto a telematics, I'd be put straight in the facility. So, from my perspective, it's a pass.
And who are you currently insured with, Tom?
No comment. So, let's move on to the next one. Enhancing customer experience through digitization. So I'm going to tell you that obviously this is something we have talked about extensively. We have definitely, the industry has moved, right? The industry has moved since we started this whole podcast. However, the sad reality is that there are, in the rest of the world, especially Europe and Asia, they have significantly more heavily integrated ecosystems, right? They've got insurance apps that blend P&C and health insurance and blah 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 blah. It's a one-stop shop. They're using AI for hyper personalization. In terms of the customer experience, I think Canada is woefully behind the curve in this space, and a lot of that comes down to this, the inability to connect different systems together to make something that's much more easy, much more you have a much better ability to personalize it and add to it and so on. That's my take. Adam, let you go first on this one.
I got to jump to the end of the line. I don't really know where to go with this one. I mean, we're rebuilding our entire back end with Mitch OS for a world of digital customer experience when it's convenient, integrated with people when you need it. And I think we're going to have to dance with those two gears meshing for the next long time, as far as I can tell.
Yeah. Jeff, your take?
Yeah, I agree. Like, I guess, basically you have to, as I said, other episodes, it's, you have AI coming in, and you've got humans, and you have to basically use both of them together. And there's a bunch of other tools, that, robotic process automation, is it AI? Is it not? There's debates about that, but it's about, blending the different tools that in the moment of truth, when a client needs you, something shows up. And sometimes AI showing up is better than nobody showing up for a day. Or, take leads on the weekend. If you had AI that could connect, verify information and book an appointment for Monday, there's a lot of leads you probably would keep that you would lose otherwise, or at night, that just keep things moving. So it's just finding that combination of things to provide that user experience. And, connectivity has been hurting us because, you can go so far down the chain right now, and then you hit a wall. Like, a consumer goes into your mobile app, wants to do a change, and then 9 times out of 10 it has to come into your brokerage. Your brokerage got to reach out and do it because the plumbing and the piping's not there. I see in the future, whether it's an agentic agent, whether APIs are built, bit of both, where the person can go right straight through and do that. Right now, do we trust the consumer to do that without us hand holding? Is there, what guardrails do we have in place to make that UX CX awesome? Those are things that we have to ask ourselves, right? What are we willing to trust tech to do? Back to Adam's earlier point, we talked about, nice to do this, but you don't want to unleash tech on something and all of a sudden it screws up, or, it has hallucinations, or some kind of, it goes rogue at that point, which, there's guardrails, but even guardrails break. So these are all things that, as we build that new experience, we got to think about.
Yeah, I think this could be very, very good for the broker distribution in the sense of, I don't know what percent of our time, particularly in personal lines, is spent not doing things that aren't really engaging with the consumer, either before or after that conversation happens. And if we can get AI to take away that bullshit stuff, whether it's portal entry or adding notes to the system, or so I think that we could turn a corner and be able to deliver what consumers actually expected of us insofar as that human engagement. And then you get off the phone or whatever, and it's all done. You don't have to then put stuff in a system and whatever. Like it's basically human. We can keep that human to human, and all the bullshit on the backside can be done with the technology. That's almost there. So and it's affordable relatively too, right? So if insurers as usual start or continue to do stuff to us rather than with us, we can leverage technology to make that go away. Oh yeah, you want me to do this step now? Well, I'll just retrain my bot to do that, or my AI will, figure that one out.
Awesome. Okay, so this one's going to be a 2 thumbs up. Need more of this for the future.
Mm-hmm.
Let's talk embedded insurance. I've heard this one come up a lot. You do see it in warranties, travel insurance now. Every time I book a flight, I'm always being offered travel insurance and rental cars and hotels and what have you. So, good for them. Now, there is a fair amount more of this in the US. It's definitely seen as a growth area globally. So I think we're seeing this. My question to you, I don't want to talk about embedded insurance per se. I want to talk about what the impact of embedded insurance is on the broker, right? So when I'm buying a travel insurance policy through my Air Canada website or whatever, there's no broker in the mix there. How much of a threat do you guys see embedded insurance being for the broker channel?
Embedded insurance is going to take over the broker and kill us. The last 5 years, it hasn't had quite as much traction yet. But you mentioned travel insurance. I was close to Niagara Falls like 3 or 4 weeks back, and all of a sudden my phone went off and said, "Do you want to buy travel insurance?" I thought I was leaving the border. So the geofencing and the travel insurance, which has been out for 3 or 4 years, but TELUS has got a partner and it's embedded right in there. So you're going to see more partnerships. You look at Tesla insurance. They've got some insurance. They've got their own insurance embedded in there. Adam, you might argue that's a good thing for them after that big lawsuit, nuclear lawsuit from that one claim they had. But there's some different vendors. So you're going to see more and more as technology gets easier and it's easier to embed. And you get vibe coding where people can program and code stuff without actually doing any of the coding themselves behind the scenes. It's going to get somewhat easier to do that. Is it going to get more of an impact? Sure. People are going to look at deals. You're going to probably see realty embedding. Some mortgage brokers embedding property insurance. It probably happens right now. There's people I know. What was it? With the guy from. I'm drawing a blank on his name, but he had the Apollo, they had a solution. I think he's now, I don't know if the last I heard he was, he had been embedded he's going to condo associations and places and embedding him with certain places. So he's getting a quote on that. So his solution is in there and he's getting an opportunity. So you're going to have to look at the different verticals to look at the opportunity, but the tech's going to get easier. Can you get in, go in multiple solutions and get it to work? Nobody's quite figured that out perfectly yet, but as tech gets easier, I think you're going to see more of it.
I want to add this one. So embedded insurance, in my mind, is just a new buzzword around group insurance. It's a one product negotiated deal en masse. So I'm president of ABC company. I go to GM and I say, "Boy, do I have a deal for you?" And I will take all my distribution margin and pay you the distribution margin to pass it on to your things. But as Sonnet found out very quickly in its early days, it had to build a giant call center on the back of these things because still to this day, you need a lot of customer service and customers demand people. So I don't think it's a how does it happen to brokers story. I think how does it happen to insurance companies? And I just looked up our distribution of insurance companies. There's 15 companies over $2 million of distribution spread out. And it's a coin flip as to who's going to win what market any given year or quarter based on that. And the number one runaway wasn't in the marketplace 6 years ago. And you can go through some of the product lines and say the same thing, that the number one in that product line wasn't in the market. So if GM does a deal with XYZ company, they'll be right priced for 1 out of 14 of their consumers. And the other 14 are either going to buy an inferior price product or an inferior fit product. I'm currently with a high value insurer on my house because in the last year I built a high value house. I wasn't for the first 20 years of being a buyer. Tom used to be with a regular market until he came on the podcast and told us how he really drives. They kicked him out. Now he's with another one of the 5 competing non-standards. I just don't see how you're going to be able to, unless the direct embeddedness, which is just, I don't know, the embedded is a funny buzzword. They're going to find a way to do it with a broker's product. Like if you embed the broker offering inside the thing, then okay, you're now talking about something pretty clever.
How do you not get selected against if with embedded? If I was an insurer, I would go like you said, Adam. You're good for 1 out of 14. And if I'm getting an offer for this new Sierra pickup truck, and it's better than anything else I can find, I'm probably going to be the only one that I'm only going to take it because I need it's better than facility. I'm Tom, and I bought that Audi, and there's an Audi offer to insure the vehicle. I'll go, yeah, I'll take that because I'm currently with facility because my driving habits, right?
Did you see the Porsche short-term rental where every 60 or 90 days you can go to the lot and take a new one? You sign up at different tiers and there's banding and you can just go swap in and out. And it's a bundled package at $1,500 a week. It's some large price, but it comes with insurance. And I thought the same thing, like, boy, there's a nice way to treat yourself if you get 2 DUIs. You know, you don't have to go to facility with your Civic. That's go get a new Porsche and have the bundled insurance. That's nice.
I think the theory with the bundled insurance is that it's the convenience aspect, right? Especially in personal lines, people want they want convenience, they want price, and I think when you're
But
bundling
what do
it,
insurance companies do with ambiguity? Everybody with ambiguity, they roll it up to price. The only way for them to cover off.
Well, you look at life insurance, right? Like if you term insurance,
you want a guaranteed issue? Sure.
Yeah, like who renews a term policy? Nobody except people who are sick and can't get another one for less than what the next
1 month
term.
When they forget about it and see the debit come out.
Exactly. But if you're ill or you're no longer insurable, you're the one that is going to keep it.
I suspect that you're going to. I think it'll be 2 out of 14 people. 1 for whom that is the right product, and the second for basically the price doesn't matter, right? They're buying a new Mercedes and it's bundled, and they're like, oh, I'm already paying $1,200 a month for my lease, and my insurance is an extra, $200 a month. I could go somewhere else and get it for $190, but I can't be bothered because at the end of the day, it's immaterial to me, my Mercedes. So I think you're going to capture that customer too, who's more about just throw it all in together. But you're right. That's now 2 out of 14 customers, not 14 out of 14 for sure.
But so tech aside, it being a straight tech forward thing, we've watched a lot of big insurers or big brokers make Porsche programs, Mercedes programs, BMW programs. They never take off. And I think you're answering the same question. Like, why don't they take off? And I don't think because there was paper or thing is the answer. Could be wrong. We'll see.
Well, having been, I never was directly involved in any of those, but I was peripherally involved in some of those. And the assumption always was that, we use Mercedes because Mercedes was one of those examples, that Mercedes buyers would be very attracted to the convenience. They wouldn't have to go to a broker or to Sonnet or TD or whatever and do more work. They'd go to the Mercedes dealership. They'd get everything bundled in together. One price, boom, done, drive away. that was the theory, and it really has obviously not panned out.
So why do you think the but?
But I think at the end of the day, Mercedes buyer probably already has a relationship with a broker who they go to their broker who they've been going to for 25 years and say, I just bought a new Mercedes. And the broker's like, great, I'll put it on your policy. Here's, I've gone to the market. Here's your 3 best choices. Which one do you want? They go, great. By the way, stick that onto my already recurring monthly policy that has my house and my business and whatever else on it. So I don't know. I think there's already some convenience built into that person's life that they've already set up, that this other convenience isn't really that much more convenient too, if that grammar works.
Yeah, I think the apples to apples comparison is if e-commerce gets accepted by the underwriter and the market, then a broker bringing those same underwriters kicking and screaming for e-commerce, providing some sort of Amazon-like comparison, but able to load balance my boats over here, my cars over here, my things into a single platform, eventually wins. You're going to need a certain scale and investment and thing to do it, but I don't think a golfer with one club over a long period of time can outcompete somebody with 14, or insert any other thing where there's specialization into the solution. Eventually, it'll edge out and problems will happen.
Okay, next item. And Jeff, I will not call on you first for this one because you went first twice in a row. So Adam, get ready. I'm going to call on you first this time. So one of our favorite topics, we've talked a lot about these, is InsureTechs and specifically InsureTech partnerships and InsureTech ecosystems. There's a lot of carriers that are partnering with some of the new InsureTechs. Like if you go back 15 years, maybe I can't remember when Tufla was founded, but there was a time when we didn't have any InsureTechs. And now I could probably name 20 or 25 InsureTechs just in Canada, who are all doing all kinds of really interesting and diverse things. Anyway, they're starting to drive partnerships, and they definitely accelerate innovation. In the US and in Europe, it's even more vibrant. The US actually accounted for 50 something percentage of all InsureTech deals in the world, right? So the US is past us there. We do have quite a vibrant InsureTech scene in Canada, but it is a bit smaller than the US and the UK. So I'm going to toss it over to you guys. How important to Canadian innovation is our nascent InsureTech community, and should we give a shit?
Yeah, I think you have. Well, I think you should give a shit because I don't think it's right if you don't give a shit and then in the same breath complain about a lack of innovation from the incumbents and the monopolies and this and that. I do think it's kind of ironic that so many of the Canadian InsureTechs end up looking over the fence to the States to get traction, because even the same little modicum of traction down there equals a much bigger number that you're able to invest and scale around.
Well, it's interesting. I mean, scale obviously is an attractive feature about the US, but my experience, and I'm going to get Jeff to weigh in on this one too, because he's even closer to it than I am. But my view is that there's the openness to innovation from the brokers or the agents in the US is actually higher than it is in Canada, in my view. And I think that's also partially what's attracting some of these Canadian InsureTechs to the US, is that they've got folks who are more ready to take a bit of a leap of faith with a relatively small organization.
I think the scale matters because, here's a podcast with 4 of us that are, kind of tech geeks and kind of insurance geeks. By its nature, this podcast would be 40 hosts in the States. And so you find these little niche microcosms, and at the same sort of percentile, you can have whole conventions around these things, from what
there are.
Right.
There are.
Yeah, it's again, like we're going through a proliferation of InsureTechs right now, and they went from trying to take us out and eat our lunch, and then we're better, we're going to take over, and then realize they couldn't do that. Lemonade and a few of them struggled to be able to displace us like they thought they would, so they started working with brokers and agents. Now you've got AI and Chat GPT and stuff coming out, and it's going to be interesting. I think this is brought up, and I don't know if it was Adam you brought it up or it was brought up in a podcast. Be careful that your product doesn't become somebody else's feature, and I think that's what's kind of concerning moving forward, because everybody throws AI on the end of their InsureTech, and there's a whole flood of them coming in. Well, like the .com bust back in the early 2000s. There'll be an AI bust. So it'll be interesting to see when the dust settles, who's going to be left.
Steve, I'm going to let you have the last word here, because I know you actually have had a InsureTech sort of come out of your shop in a sense, right? Didn't Christy used to work with you from Quick Facts?
Yeah, she developed her product in house and then took it out. Used to be called the Cheap Sheets at Cheap Insurance, and became Quick Facts, which is good for her. It's great. I'm going to take a different approach on this at the time of recording. I know about some stuff that's probably going to happen fairly soon in the industry. And there'll be some announcements about it. But I think that when you talk about InsureTech partnerships with insurers, I think that there'll be less of a need for a partnership to, you take a large company, whether it's Intact or Aviva, they have so many smaller product InsureTech type vendors lined up at the door saying, we want to partner with you because we need pricing, we need this, we need an API. Like, what if they didn't need to partner individually and they could go to somewhere? So for example, in the UK, there's Polaris. You can access, it's all centralized. Anyway, I probably already said too much, but I think that there's going to be some good. I'm really optimistic about the next 3 years from now, and insofar as accelerating the ability for brokers to access more InsureTechs, different products reliably, and not have to rely on just a few for scale.
Well, we don't normally end episodes on a cliffhanger, but that sounds like something we probably will be covering in a subsequent episode. So yeah, for sure. And as Steve says, it's pretty exciting. So let's leave that as a cliffhanger for now. And again, shout out to IFS Premium Finance. And thanks, guys. Appreciate your time. And we'll see you on the next episode.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.